Hello everyone, my name is Adriana Calderon. I am the Director of Transfer Pricing Solutions Asia based in Singapore, and today I will be speaking about transfer pricing documentation. What is it and how can we help? Before we get into the detail, just a brief overview about our firm. We are a specialist firm that provides practical, proactive, and cost-effective transfer pricing advice to multinational companies. We are a group of advisors from Big Four and mid-tier firms based in Malaysia, Australia, and Singapore. I have more than 15 years of experience advising multinationals on how to manage their transfer pricing risk across a broad range of industries, business models, and type of transactions. So why transfer pricing solutions? We offer a 6-point guarantee shield. Shields stands for first, security, which is we ensure that all our clients' information is secured, and followed by Singapore and Australian standards. So they can be sure that the commercial information is kept in good hands. We offer high quality with a team of a minimum 5 years of experience of training in transfer pricing advisory only in the mid-tier firms or Big Four. We offer integrity in every quote that we provide, being very clear on expected fees and all-inclusive prices, as opposed to trying to charge clients for a lot of out-of-scope work that is not required. We offer a seamless execution of projects whereby we basically built on our expertise to carry on projects very quick in an efficient manner and timely for all of our clients. We offer basically tough leadership, whereby all our directors are encouraged to be involved not only in consultancy, but also in industry accolades and government accolades. And in every project, our director is involved as the project manager, and that way our clients can be guaranteed that an expert is always on call and approachable at every step of the way. So let's start talking about transfer pricing documentation in Singapore. So what is the scope of transfer pricing? Transfer pricing refers to a price at which transactions between companies of multinational groups take place. So those transactions are also known as controlled transactions. Why is that? Because those transactions can be subject to manipulation in the price. And that's why the arm's length principle is the standard that has to be followed to set that price. What that means is that every price in a controlled transaction needs to be in line with market price or arm's length price. With transfer pricing documentation, what we try to achieve is to provide evidence of two key issues. One is the substance of the control transaction and the commercial reason of the control transaction, to make sure that the sole motive is not for tax purposes. And that's something that most tax authorities are looking at the moment in the region, that the transaction has substance. And the second issue is that the price is at arm's length or is a market price. The most common intercompany transactions entered by multinational enterprises can be classified in 4 groups. One is tangible property, that involves the sales of goods and spare parts. Intangible property and royalties, that involves brand names, trademarks, and know-how. Services transactions, which are very common in Singapore, which can include a broad range of services such as technical, research and development, and management. And loans and finance, which is also very common in Singapore, which can be from plain vanilla loans, where there is an interest rate agreed between the related parties, to more complex transactions such as guarantee fees, bonds, or redeemable preference shares. So why is transfer pricing documentation important for multinational groups in Singapore? In Singapore, it has become mandatory to have transfer pricing documentation since 2018. Also, the arm's length principle applies to all Singapore taxpayers that entered into a controlled transaction. And this arm's length principle rule applies to both domestic controlled transactions and international controlled transactions. Also, transfer pricing documentation assists the Singapore taxpayer to prove compliance with the arm's length principle. It reduces the risk of audit and dispute with IRAS. It helps explain the taxpayer position to IRAS and minimize penalties in the event of an audit adjustment, and is also generally recognized as a good practice by tax authorities. In our experience with audits and transfer pricing reviews, tax authorities are very or regard very well the fact that the taxpayer has prepared transfer pricing documentation, because what it sends is a message of the client being very proactive in managing their transfer pricing risk rather than not managing at all and being reactive. So it gives confidence to the tax authority the preparation of transfer pricing documentation. So one common question that we receive from clients and people in the industry is whether the TP documentation drives the obligation to comply with the arm's length principle. And the answer to that is no. The arm's length principle applies to all Singapore taxpayers that enter into controlled transactions. So what this means is that even if you are a small multinational group with maybe operations in 2 different countries, and your threshold is not exceeded, IRAS is still entitled to ask you on evidence on compliance with the arm's length principle, even if TP documentation is not mandatory for you. So that's something to think about, because what it means is that IRAS can ask for evidence of compliance with the arm's length principle to all Singapore taxpayers that entered into controlled transactions. So in Singapore, the Singapore TP guidance states that having transfer pricing documentation in compliance with the Singapore transfer pricing requirements will reduce the risk of audit and dispute with IRAS, help explain the taxpayers' positions to IRAS, and minimize penalties in the event of an audit adjustment. Having transfer pricing documentation prepared by the Singapore taxpayer will provide IRAS with useful information to conduct an informed transfer pricing risk assessment and a thorough audit. So another reason why transfer pricing documentation is important is because it can help Singapore taxpayer with penalty protection and reduce the risk of audit. Failure to prepare documentation contemporaneously in accordance with the Singapore transfer pricing requirements will prevent accessing lower penalties if the taxpayer receives a transfer pricing adjustment that increases their tax liability in Singapore, will prevent from performing year-end and retrospective adjustment, will prevent to request assistance from tax authority in case of double taxation issues. One key point here is that failure to prepare contemporaneous documentation cannot be remedied later, because in Singapore, we have the requirement of having to date the documentation when the documentation is finalized. And that date is very difficult to change, because basically the analysis is based on data, and it will become very evident based on the data that is used, and also based on the date of emails that are being exchanged on the final documentation, whether that documentation was prepared contemporaneously or not. So this is very important to keep in mind. And the other point is that in Singapore, we have non-compliance penalty. So it is very important that the taxpayers prepare the documentation contemporaneously, so they don't risk the potential non-compliance penalty and the rejection of the TP documentation. So what is the transfer pricing documentation requirements in Singapore? They are in Section 34F of the Income Tax Act that was updated in 2018. The new legislation applies from year of assessment 19. It states that it's mandatory for taxpayers that meet two conditions: when the revenue or gross revenue is greater than 10 million, or TP documentation required for previous basis period. What they have to prepare is documentation at group level, documentation at entity level, and for certain taxpayers, country by country reporting. It has a very strong language on mandatory update every year, an annual review of the transfer price. In Singapore, we do not submit the TP documentation. We have to have it ready upon request. But again, as I stated earlier, when it has to be prepared by the time the tax return is filed. Who should prepare TP documentation? It should be prepared by taxpayers who have entered into related party transactions or control transactions to show evidence of compliance with the arm's length principle. When is TP documentation expected to be prepared? Ideally, it should be prepared contemporaneous to the related party transaction. And what that means is prior or at the time of entering into the transaction. But in Singapore, contemporaneous needs, for the TP documentation to be accepted as contemporaneous, needs to be prepared no later than at the time of completing and filing the tax return for the financial year in which the transaction takes place. So if it's left for when the IRAS requested, it may not be accepted as contemporaneous, and IRAS has the right to reject the documentation and deem it as not contemporaneous. So last but not least, what is IRAS recommendations on how to prepare TP documentation? So in Singapore, we have a 3-step approach, where step number 1 is performing a comparability analysis, which is the heart of transfer pricing, that involves comparing a controlled transaction and an uncontrolled transaction that has comparable parameters and can use as a basis to draw a conclusion on the price in the controlled transaction and the uncontrolled transaction. Step number 2 is the selection of the appropriate transfer pricing method and parties. And step number 3 is determine the arm's length result. In addition to this 3-step process, in practice, we also do a group level analysis and an entity level analysis, which is actually included in Singapore TP guidance and required under Singapore TP guidance, because the group level analysis and entity level analysis give an overview of both the group that is relevant to Singapore and the Singapore entity. So how can we help, or how can our firm help you with your transfer pricing needs? We can prepare global transfer pricing documentation, group master files, local transfer pricing documentation for Singapore foreign subsidiaries, regional transfer pricing documentation for regional head offices, transfer pricing documentation update for prepared by either in-house experts or other advisory firms, transfer pricing planning documentation to document transactions when the multinational group is planning to enter into the transaction. We can also assist with transfer pricing contracts. And last but not least, we can also assist with global, regional, and local benchmarking, given that we have access to global data to perform company benchmarkings, benchmarking for loans, and benchmarking for any type of contracts, including commission, royalties, licenses. So if you have any questions or you want to approach us, feel free to write us on this email. Also, feel free to follow us on our social media channels, such as LinkedIn, Facebook, YouTube, and Twitter. We're always publishing interesting and valuable information in the form of videos and blog. And also we are very active in our events and webinars. So follow us to stay tuned and to be updated with the latest information and valuable information on transfer pricing. Thank you.